Trevor Robins. I'm a training and education manager with Farmers Mutual Hail Insurance Company of Iowa. Today we're going to be talking about some of the 2025 decisions that are coming up for crop insurance, as well as kind of what's happening in the industry with the Farm Bill, and talk a little bit about prices and things and how we look to mitigate risk in a time where we've got those input costs raising and prices continue to kind of remain steady or drop a little bit.
Farm for Profit Podcast. Take a listen, have a blast. Farm for Profit Podcast. Learn about farming while having a laugh. Farm for Profit Podcast.
And listeners, welcome back to the Farm for Profit Podcast. This is Tanner.
This is Corey.
Oh, that was good.
Yeah.
This is Corey.
Next on stage.
No, you can't do that.
Okay.
That's not.
Just ruined it.
Oh my God! What? Hey, we gotta start.
Hey, we are doing a subject that isn't the most sexy, so we got to make it sexy.
Are we doing accounting again?
No.
Is it sexier than accounting?
It is.
Oh,
it is, but not by much.
Jeez,
not by much.
I thought you were gonna say it doesn't take much. The numbers guy in me kind of likes those banking and accounting shows.
No, it's that time of year again. We got to start thinking about our insurance, crop insurance on the farm.
Yeah, we probably do.
A necessary, I'm not going to call it evil. It's not evil, but just maybe people like doing it. I'm not a fan of it. To me, it's like going to a restaurant that the menu's too big and I can't make my mind up. Like, what is it? I know all this stuff is good, but which one do I want to eat?
I do, and then I almost compare the experiences like you love going to the dentist and I hate going to the dentist.
Yeah.
So it's
That's
probably
because you've had bad experiences and I haven't.
Maybe that's your crop insurance experience.
Because I took care of my teeth.
Ouch. That cuts deep. Listeners, thank you so much. We say this over and over again. It's true. It's genuine. We aren't who we are without you. So continue to share this with your friends. And if you don't think somebody's making the right crop insurance decision, what a perfect show to passive-aggressively tell somebody they're wrong.
Well, and even if you think you're doing the right crop insurance, I think it's always good to brush up, right? Anything you do just once a year, it's hard to be an expert on it. Mm-hmm. So it's always good to listen and see what you're missing.
And what we're doing today is we're here to educate you, right? Some of these pieces you might already know, but we know there's going to be something in this show that's going to be worthwhile to you. And what better of a job title for someone to do this is the Training and Educational Manager. Isn't that fitting? Exactly what we're here to do. Now we just need to add entertainment to that. He should become the Training and Educational Entertainment Manager.
Yeah.
Because Trevor Robins from Farmers Mutual Hail is here to make the most fun he can out of crop insurance.
I will do my best, gentlemen. Do my best.
You got this.
Might have to talk to my boss about adding the the entertaining part of it too. So
you guys are back because you did a show with us. Was it last year?
I almost broke the internet.
Yeah, you almost broke the internet with a. I don't know why. I mean, I guess I do know why. It was something that people hadn't heard of before, and that was the pasture and rangeland option that you guys had. And how many views did that have? Millions of views all over social media. And you're back because obviously it was a value to you.
Yeah, absolutely.
Yep. So welcome.
Well, thanks for having me. It's awesome to be here. So
why don't you give us a little bit of your background before we dive into what the Training and Education Manager does?
Yeah, you bet. So started in crop insurance in 2008. Just a little bit about me. Grew up in a small community. That's where we actually live now in southern Iowa. And never thought I'd be in crop insurance. Started out thinking I was going to be a history teacher. Had a buddy that was like, hey, do you want to get into working for a crop insurance company? Didn't have any idea what that was. And now here I am, in 17 years later. So it's been a fun ride, but definitely a great industry to be a part of. Working with farmers, working with agents. It's a great job. So
the Farm for Profit team is heading to Denver for a Commodity Classic, and we'll be at the Sukup booth each day.
What will you be doing there?
Check out the schedule and come hear about all the new offerings from Sukup, from new groundbreaking grain monitoring software to the traditional top-quality steel solutions.
Once again, Sukup's motto of store now and profit later is proving that having the right grain storage system pays off. Whether you're upgrading bins, dryers, or grain handling equipment, Sukup has you covered.
Visit sukup.com to learn more and see you out in Denver. Wow. 2008 to now. Crop insurance since that entire time period. That's a lot of time in one industry.
All at Farmers Mutual Hail?
Not all of it is Farmers Mutual Hail. So started out with an approved insurance provider company, ProAg. Started out with them,
Yep.
then moved to John Deere Insurance Company, and then John Deere Insurance Company was acquired by FMH in 2015. So been there ever since. So that's been kind of my path to FMH.
And now what does the training and education manager do?
Yeah, so our team is, our responsibility is we go out and educate our agents mainly. So do a lot of internal training, but a lot of our job is to go out and give updates to both product and our systems to our agent groups. So as we're working with those agents throughout the country, that is what our team is primarily charged with doing. So just as that, training, education, and as you mentioned that crop insurance being that large menu from 2008 to now, it's changed a lot. So our job is ever changing, and we get updates every year, things we get to go out and talk about and make sure our agents have the best information, so then they can then pass it on to the insured.
It is like a large menu, except for everything on the menu is like the BLT. They're all acronyms.
Yeah.
And the descriptions are not pictures. So it probably makes it even harder to keep track of.
It's a little bit tough, and so I apologize if I do talk in acronyms today. That is one thing we get, we get a hard time for. Everything is in acronyms in the crop insurance industry, but something you kind of get used to along the way.
So before we even turn the mics on, you and Corey were already talking a little bit about the I'm going to say the state of the union for the crop insurance world. We're recording this on the 7th of February, so just a couple of weeks before it comes out. What does it look like?
Yeah, so right now, as it sits today, crop insurance is still very viable, very strong. But with anything, anytime we change an administration, there's always things, up in question as far as how does this look. Currently, for us, we always track the Farm Bill. So the Farm Bill being, a large portion of what we do. Crop insurance now, the Farm Bill itself, the vast majority of that is the nutrition program SNAP, right? So the Farm Bill covering crop insurance is what we would say is a small percentage of the pie, is large number of dollars, but that's something we're always paying attention to. Right now, as it sits today, we've been extended to September with the Farm Bill. Really, how that impacts crop insurance is permanent law. So it is there so we can provide that coverage for growers every year. But the Farm Bill, what that enables us to do with a new Farm Bill is improve the products we have, improve our program overall, make changes, things like that. So as of right now, unless anything moves in, and as we know, a lot of stuff's changing right now, it's pretty fluid. Unless that anything moves yet this year, I would say will be a lot of this year before we're looking at that. Again, I'm not a political expert, so I can't tell you where that moves or how that would move. But that we're always keeping an eye on it and seeing what it does. Because every time we get a new Farm Bill, there will be something new, generally with the crop insurance program, whether that's something new that we need to administer, new products, options, things like that.
So we have to make decisions on our farm for crop insurance this spring, actually very soon. If something gets changed in the Farm Bill, you said it gets kicked to September. If something gets changed then that would affect your products, it's not going to affect anything for this year.
Correct. Great question. No, it wouldn't affect anything. Essentially what it does is it would then be, RMA, Risk Management Agency, would at some point we would have certain what we call contract change dates, things like that. They would say, hey, this is what's going to be administered the following year.
Yep.
So then that's where our team comes in. We go out, educate our agents to ensure that they're then able to go out there and educate all of you.
Yep.
So.
February is a pretty important time for crop insurance. What are we doing right now in the month of February?
Yeah, so right now especially for us here, Iowa, Midwest, I-states, and then a lot of those areas with the March 15th sales close, we're looking really closely at the pricing, right? So we're in a discovery tracking period from start of the 1st, goes through the 28th of this month, and then we'll have our prices. So right now, looked at them, yesterday afternoon, this morning, we're tracking right around $4.67 on corn. like a little over 10.5 on beans for our projected price, which corn at this time last year was 466 is what we locked into. So we're tracking really close to the corn price. Soybeans are a little bit down from projected price of last year, but they've gone up since the fall. So
Yeah, as we're recording this, is it going off December and November? So new crop?
correct.
prices?
It's going off December futures. Chicago Board of Trade figures is what we're tracking throughout the month.
So today it is 466.5 on corn, and let's see, make sure I'm on the right one. 1056 in 3/4
Okay.
on
So
the
probably a
soybeans.
non-factor day. It's a
We are
Another-
down 9 in beans and 3 in corn.
Okay.
So-
Yep. So it's another day in the average, essentially. So we're looking at that. What do we average overall over that 28-day period to lock in? And then insureds will know what that projected price is for their insurance.
But then there's also a fall price as well, and it's the higher of the two.
It is the higher of the two, depending on what you take, right? So maybe we can get into that a little bit too, but a vast majority of growers will take revenue protection. RP policy, again, one of those acronyms, but revenue protection is what the vast majority of insureds are going to look at. Very, very common, probably throughout the United States, our average, you're probably looking at that 75% coverage level. So they're looking at a certain percentage to cover on that actual production history, that APH on the farm, times that price, times your share percentage, essentially. Now, where we're located here in Iowa, we see a lot of that 85%. So they're looking at that price ultimately with that revenue protection. There are other options, APH options, things, but far and away, revenue protection is a lot of what we look at.
I've heard several people talk about it. So the way we like to look at it is it's crop insurance is subsidized, correct?
Correct.
This is the cheapest hedge that we can have for our
Sure.
marketing plan, right? So
Yep.
what is the most subsidized option?
So most subsidized now, depending on coverage level. For example, if you are on like enterprise unit structure, okay, as it sits today, I believe it's about 77% at the 85% level. Now, without having that chart in front of me, I think as you go optional units, now you're taking on, or essentially the government's getting a little bit more of that risk.
Yep.
The premium gets to be a little bit less, so the subsidy is more around the mid 50%,
Okay.
55%.
What's the difference between an enterprise unit and an optional unit?
Great question. So, that enterprise unit is going to be, so enterprise, essentially, just think of if you've got 5 units. So when we talk about unit structure, we talk about sections. So for the listeners out there thinking about where my farms are located, these are decisions you have to make early on, but it's also an important conversation to have with your agent. So an enterprise unit, for example, it's going to be less on premium, but what we're looking at is, let's say I've got 5 units. I've got 5 fields spread out over the county. When we go to harvest and when we look at a loss, we're going to take those all together. So essentially we're putting them in a bucket, so to speak.
Your one farm, one bucket.
Yep. And then so one farm may do poor, another farm may do great, but we're taking the good from the bad, and then that's our payment if we have one.
Which makes sense why that would be less of a premium.
Exactly. You as the insured are taking on more of the risk in that case, but that's another way to look at how can I mitigate some of that cost up front.
Yep.
As we're looking at the margins we have right now, that's what we're looking at from an insured standpoint is how can I maximize those dollars. Now for some, and that's also an option by crop. So if you're a corn and bean grower, again, anywhere growing multiple crops have enterprise unit options. But if you're a corn and bean grower, it could be that your corn, when you're on a rotation with corn and beans, it might be that one year you're enterprise and then you're optional the next. So that can switch. It is continuous, but that's a conversation to have with an agent as well. And those agents out there will definitely be bringing that up.
So then what's the optional?
So the optional would be, let's say we take those same 5 farms, and we're gonna pay a little bit more premium, but we're now isolating those losses. So if 4 of the 5 do really well and my one doesn't so well, we're gonna pay on that loss. So we're essentially being able to take that risk on an individual unit level as opposed to just throwing them all together.
So you said it's available by crop, but is it also available by county?
It is. So you could farm in Polk County and Story County separately. You could have your corn and enterprise in Story and optional in Polk, and it's interchangeable throughout the county.
That's why you need a good agent. Holy smokes.
Right. Well, and the reason why you might do one over the other. Isn't there different premiums for different counties because of some counties might be a magnet for hail, or have a different soil type that is more prone to drought?
Yep. Yeah. So base rate is set by the government, by county, so they will vary, that way as far as base. But it also, there's so many factors that come into premium when you start looking at individual growers APH. So when you start looking at that, you start looking at those coverage levels you're electing. All in all, just the easiest way to say it though is that that is one thing that's unique about crop insurance is every company sells the same product. Unless we start talking private products, it's the same product, same price, each county. So I can't go sell it cheaper in Polk County than another agent or another AIP. But yeah, it is set by the government base rate. Base rate this year has gone up a touch, but with all the options and things added, it's kind of unique because we're actually looking very, very similar to what we did last year.
So if we're similar to what we did last year, did we see very many claims?
So as far as the price drop, we had some there. Now, what was unique about last year is even though that price was starting to drop in the fall, we had really good crops in some areas. Now, some areas had some, southern Minnesota, for example, had a rough year. But we looked in Iowa, and some of the outlook wasn't great, but we ended up having some really good crops. So we had some claims with the revenue drop, but it wasn't as bad as what it might have been in a year where we had poor production. So
While we're explaining some things, APH, annual production history.
So actual production history.
Okay.
Yep.
Can you explain how you calculate that, and then how you guys use that in your calculation, like say 85%?
Yep. So actual production history is going to be your average. So let's say we're taking that one farm, and we're looking at the average year over year, and we're trying to build a 10-year history. So as the years come in, years go out. So each year, and if you're on a rotation, it's every other year on that particular unit. We're taking that yield, and that's our bare bones yield. We're essentially lining up with the policy. Now, how we figure that APH, there's other common options that are in there. One thing, and maybe you guys are familiar with it, is trend adjustment. So that's been out a little while. Trend adjustment was really brought about because of the rotation and because of the different varieties of corn, different hybrids, both on corn and beans, and the varieties there that were improving every year. It was hard to make that APH catch up, essentially. So as you have common options built in, that's another thing that your agent will talk to you about. Trend adjustment, for example. Also, we have what we call yield substitutions. So in those years where you have a poor yield, there are common options built into the policy that enable and mitigate those disaster years, so to speak. So let's say you have a corn crop that on average we're doing 200 plus bushel, but this year we have 120 or whatever. We've got stuff built in to be able to mitigate that and keep that APH integrity. So it's not just 1 year is not.
So you're trying to eliminate some outliers.
Yep, trying to eliminate some of that, and also just knowing that in the world that we work in farming, that weather impacts year to year. We don't want 1 or 2 really bad years to just dissolve that.
Does that go the other way though? What if you have a abnormally amazing year and it's 350 bushel?
Mm-hmm. You get 350 bushel.
Right.
So
Okay.
so you can still and that's what we're seeing as well, right? So we're seeing those years that now it's bumped my APH up a bunch because I've had that really good year, and that's okay. Now there is something to be said about. The biggest thing is integrity of that production is making sure we have our records right, right? And making sure we have the records in place so that we can always prove those records. So.
Right.
I know, just for clarity, I understand it's not administered by Farmers Mutual Hail or any of the, you call them APIs?
AIPs, yeah.
AIP. See, it was close, right?
Yeah, very close.
Letters.
We've been getting text messages about ARC and PLC.
Mm-hmm.
Can you just spend a couple minutes dissecting those?
Yeah, just a little. I can talk a little bit of that. ARC and PLC are FSA administered programs, so they're essentially free programs to sign up for. That deadline has extended this year from the FSA side, so that's administered by USDA. So it's just a different arm of USDA and what we're working with. But ARC and PLC have an April 15th deadline this year. So you've got your ag risk coverage and then your price loss coverage. Now, to get into too many details of those, I can't necessarily speak to that because I'm not an FSA. FSA, not real well versed in that side of it, but I can tell you how it impacts crop insurance. The biggest thing when we start talking about the supplemental products on crop insurance, PLC is a little bit more lenient. If you pick ARC at FSA, for example, that cannot be elected with SCO with supplemental coverage option. But yeah, so that is one thing that just came up. They've got a month extension on that. Now, what's unique about that is when you're making those decisions for crop insurance, for example, for SCO, and you go to pick ARC at FSA, and those can't go together, then essentially the SCO would not be in effect. So yeah, that's kind of what, as far as a holistic look at those programs. The other thing that with FSA programs, they're looking at base acres. Okay, so we're looking at planted acres on the farm every year from a crop insurance standpoint. Those base acres that are set at FSA those are the acres that are going to be looked at for payment.
So I'm just going to read this here. So we have, since we're talking about it, ARC, so agriculture risk coverage, provides payments when the actual revenue for a farm is less than a guarantee set based on historical data and market conditions. PLC, price loss coverage, provides payments when the effective price for a covered commodity falls below its effective reference price.
Yep.
Just so we have that.
So if you felt like, if we're just trying to lay out an example, not putting this on on Trevor, if you felt like because we're going to potentially have 95, 96 million acres of corn, that the price of corn was going to fall out of bed, based upon wherever this base price is set, maybe PLC for your corn acres makes sense, if that's the way you think this is going. If you believe that we'll have supported prices because of year-round ethanol approval and whatever is going to support and create demand for all these acres and bushels, maybe PLC isn't the product for you. It's probably a lot of notion and feel.
Yeah, we've gotten a lot of people asking. I feel like most people have been leaning ARC in our world,
And some of that is off, looking at historic payments as well, and then looking at the outlook of this year and how is it closely related to last year or the year before. And those definitely come up in crop insurance as well. But again, not administering those programs, we don't touch those as much.
So you said the deadline was extended. Why and till when?
So till April 15th, and great question on why. So as far as the why behind it, not 100% certain.
Because we can.
Yeah.
Am I correct in saying if you don't elect ARC or PLC, it just stays with your previous election?
That's the way I understand it.
That's right, yeah.
Yep. Just goes year to year.
Okay.
Okay, so we've talked the difference between enterprise units and optional units. We've discussed that multi-peril crop insurance is priced the same in the county, no matter who the AIP is that's selling it. So we can buy from your agent, you can buy from my agent. The pricing is going to be defined based upon the supplemental coverages or the private products. Explain what those are.
Yep, that is correct. So those supplemental products, private products, a lot of the listeners probably have either talked about or have a crop hail policy, for example, or a private product. Those are the products that are going to set those companies apart. So those are the products that we can administer. Some of our rules are, how we administer those products are based on just even state ratings and things like that. But that is not something that is subsidized by the government. That's what then is each company can offer on their own and they truly are supplemental products. It's a way to take what I have for multi-peril crop insurance and how do I add to that to mitigate my risk? What can I build upon with those private products? So that is essentially in a nutshell what those private products do for those companies.
And you can only get up to 85% through the government, but with these products you can get above that.
Yep. So, and we're talking about, let's just talk about the county level products first a little bit. So let's just say I do have that 85%. Some of my options right now, and this has been in play for a few years, but we have these acronyms again. We've got SCO and ECO. So supplemental coverage option and enhanced coverage option. Those are some options that I can take. One thing as an insured that I want to be talking with my agent about, not only on prices, but how those work. So those are county level products. So for us, we're looking at revenue protection on an individual. So I'm looking at my own farm. The SCO ECO product is looking at the individual county level. So it's looking at how does the county do and then what did that county revenue or county yield do? One thing that insureds need to be aware of too is those are paid a little later, especially for those that have had these products or maybe don't. Those are paid out the following summer. So for example, if you buy that in 2025, it won't be paid out until June of 26. Okay, so that's a county level product. SCO, for example, will take you from your coverage level up to 86%. ECO will start, and you have got a couple options there with 95% down to 86 or 90 down to 86% at the county level.
It looks like some of the subsidy is increased for ECO in 25.
Has. Yep, it has. So matched SCO this year. So that's another thing that we're seeing. Probably more insureds looking at ECO because it is a 65% subsidy. And I guess if we just talk about subsidy a little bit, it's just if we're looking at $1 premium, the government then is paying 65% of that. So it's 65 cents on the dollar is what they are paying. So that again is matching SCO, and I think that's why we're seeing more and more insureds looking at that this year.
Yeah, the subsidy is something we constantly get comments on on all the socials from people outside and inside of ag. But it seems like the really nasty ones come from outside. Like, we should quit propping you guys up and all that. But
right.
It's essential, right?
It's huge. And that's, we could probably talk all day about that, right? If we talk from the ag market, from just even the American farmer, crop insurance sector, or anybody that's pro farming in the United States, as we look at subsidy, really what it boils down to, and not to get too deep and heavy here, but really what are we trying to do? We're trying to feed, clothe, fuel the world. Well, if our premiums are so high that insureds can't afford to operate, it makes it really difficult. And that's really in a nutshell, and a big answer is if we don't subsidize this and make it so unattainable to be able to pay a premium, it's really hard to operate year to year. And that's something that FMH, crop insurance industry-wise, we're passionate about. Okay, that's the thing we're trying to do every year is make sure we have farmers farming every year. So that's a pretty important piece of our business, and that is why that subsidy is so important. There's tons of things, holes that they try to shoot into the program, right, and say that it's not necessary, but that really is at the crux of the issue is we've got to be able to make it affordable for growers to be able to pay the premium, keep farming, and then have that safety net.
Well, we're growing a commodity, right, which commodities are people want cheap, right?
Yep.
And
right.
We're really good at it, so we'll hurt our own self by overproducing. So we're really not in control of the price. We're not in control of the weather. If we get a couple bad years or one bad year that knocks us out and we don't have a insurance that we can afford, you're not going to have very many, at least small farmers left.
Right.
So it's kind of crazy.
Yeah, I do think the subsidy debate can go on forever because we've got listeners that will message into us saying that they don't buy crop insurance because they don't agree with that and it's a moral issue. Well, that's fine.
That's probably because they make too much money,
I was
isn't it?
just-
Isn't it? Isn't it? If you make
it goes
too
a little
much,
bit further than that, right?
Yeah.
It goes beyond that. Now, these supplemental products, do you have to have base multi-peril policy in place, or could you just buy a supplemental product?
You could actually just buy a supplemental product. Now, I'll say that with crop hail. So let's just go back to ECO, SCO a little bit, and I'll touch a little bit on and this is an FMH product, so ECO Plus and SCO Plus. Those are supplemental products. Those do require you to have the federal product. So those are essentially what we're looking at is we've got some county level coverage with SCO and ECO Plus, or SCO and ECO, excuse me, and then I could potentially buy SCO or ECO Plus alongside it. So then that also gives me the ability to have some of that individual top-down coverage. So I'm trying to close that gap if I'm at 80% or 85%. But yes, I would have to have those ECO, SCO. Now, to go back to your original question there, Tanner, that let's just say I didn't have federal crop insurance. I could buy a crop hail policy. Now, what is a little bit different with a crop hail policy or private products? So when we look at multi-peril crop insurance, we're looking at naturally occurring events. Okay, so essentially God-made events that we would say are, again, out of our control weather-wise. Private products are a little bit different. So crop hail covers that. For example, our policy covers damage from hail, but it also covers fire damage. It covers theft, vandalism, malicious mischief. Somebody drives in your cornfield, that kind of stuff. It also covers has stored grain coverage. So when we've got on-farm storage going to the first place of processing, covers some of that. So there's that multi-peril wouldn't necessarily cover. So they really work in tandem, hand to hand. And I know that's kind of a long answer to your question, but yes, the answer is you could potentially just have private products. Are you going to have the most complete coverage? Probably not. Is really what that would boil down to.
I was just curious if it was even an option.
Yeah, you bet. Absolute option.
Why we call it crop hail if it covers more than hail?
So that's always it's always. I think it's one of those things that probably started out as crop hail, and then every company's kind of built onto it, creating that package. And that's really part of the reason why when we, I know we talked about, not everybody wants to talk insurance, right? I'm passionate about it. It's what I do every day. But seeing as we've gone and evolved as an industry and what we need to cover, we see those issues that farmers face, right? You have a fire, you have something that you have combine fire, or you have something that you have damage to on-site storage where you got that grain sitting there and now it's essentially gone, right? And we've unfortunately seen a lot of that in Iowa the last few years when we've had derechos and tornadoes and things like that. So,
farmers, you do it all. So should your technology. Level up your equipment with the latest innovations from Ag Leader.
From sure force downforce control and sure speed high accuracy planting to right spot individual nozzle control, Ag Leader has you covered.
And now, with the new In-Command Go displays, you get unparalleled visibility and control, keeping critical information at your fingertips. Upgrade today and reap the benefits this season.
Visit agleader.com or contact your local Ag Leader dealer to get started. We've all heard those horror stories, combine starts a fire and then gets, if it's windy and gets to the neighbors and, who's, at fault for that. Yep. It wasn't an act of God. It was someone not doing maintenance or, type of deal. It's like, boy, you can get into the weeds and you can rack up a lot of money quickly
in a hurry, right?
Yeah.
And that's the thing too, and I won't get too deep into who covers that and what, but there's also that line where those naturally occurring events may happen, but that combine fire, for example, if we're looking at our own combine, we might have some coverage. If it's the farmer's combine, then we start to get into some lines where we have to make decisions on who's responsible, right? But it's always interesting and we could come up with lots of examples, unfortunately, for
and
that.
You got to have a good agent to, explain all that and knows the system well to explain it. So.
That is one thing I would say too, if I could add, as you're looking at these decisions this year, a lot of listeners are working with those agents. We've got a lot of really good crop insurance agents. That's what they do, right? That's their business, is to look at that and help you sit down and decide what's your bottom line and what are we trying to do from a marketing standpoint this year and how can we best protect every dollar. So,
and the other thing you mentioned was crop in the bin. That's one thing we don't think about crop insurance or regular insurance on. That's a large that bin site sitting there empty compared to full. That's a huge value change. How do you insure that?
Yeah, so that's where the private products would come into play, right? So when we're looking at multi-peril crop insurance is covering it from the time it's in the ground to the time we harvest it, right? But as far as the private product, that's where we want to have that protection to know, hey, if this is gonna sit in the bin for a few months, I've got that coverage, that peace of mind. Now there are some options on some regular farm insurance and things, which I'm not an expert on, but the crop hail piece, just primarily for our crop hail policy, covers that and gives you some of that peace of mind as you're waiting to market that grain and offload it.
See, so Tanner has this thing in his vehicle for car insurance that tells him whether he's driving better or not, and he gets a better rate. Can I get a better rate because I got a soak-up grain dryer and full air floors and all that opposed and sensors and know that my grain's in good condition instead of that person going, I'm going to put this 20% corn on this Y aeration floor.
You can just say me.
And hope that it goes, and then all of a sudden it's gone and there's a fire.
Yeah.
Can I get a better rate?
So we don't really have that built in.
Come on.
We don't have it built into the tractor, the combine or anything, but
You should adopt it.
Maybe have to pass that on to the people that make the decision. So, unfortunately, I don't make those calls. So the people that write my checks do. So
I use my phone too much. My Driveology doesn't really shoot my premium.
Now I will say, it's just like any other insurance product. It's rated based on what we see, right? So, and some of that comes from the states saying, hey, these wind rates need to change a little bit, or these, but Yeah, I mean, it's rated based on, losses and things like that as well. Because at the end of the day, we're still a company trying to make money just like everybody else too. So
Yeah.
we can't just sell a product at the absolute cheapest we can sell it and then just hope for the best, right?
It is
So-
crazy though, the amount of data that you can have and how AI is coming into all this. I mean,
Yep.
you guys, 1197 screwed your guys' wind product,
Yeah.
right? One hybrid did. Now, we have all this data from all these seed companies and independent sources. Like you could almost insure for better agronomic products.
I think that's a fair assessment as far as where we're going with AI in general, but not only, just even the technology we have now compared to when I started in 2008. So it's changed so much, but business intelligence is huge, right? So that having that AI that we have now and just being able to pinpoint what are creating those perils or those prices and things that we're looking to protect, what's creating the biggest issues with them. So I think AI, is absolutely going to be something that is, possibly industry leading and works into the equation.
You started talking about how your agent, the expert that you can lean on. We've got young listeners that are first year farming very early on in their careers. Is there a special assistance or any programs that they can get into that might benefit them?
Yeah, so we're seeing a lot of that, as you mentioned, and seeing more and more of it every year. Individuals either starting farming or taking over operations. There are programs out there for FSA, but also for crop insurance, the Beginning Farmer Rancher program or Veteran Farmer Rancher. So if you qualify for those, now there's some, we won't get deep into the qualifications and things, but basically we get some there. If I'm a beginning farmer and rancher, if I haven't farmed for at least 5 years, I get some help on subsidy. So it's an extra bump in 10% on subsidy. There's some different rules when it applies to being able to use APH from another grower or if I'm taking over an operation. Also, there are a little bit bump in their yield substitutions as well. So on those years where we've had some rougher losses, their yield substitutions are a little bit higher. So their yield adjustments and things like that. So there's definitely incentive for those insureds to be able to have that opportunity to get started. And that's why they were really built, was to make sure we're incentivizing those new growers to come in and be able to farm.
And this is government.
This is, yep. So this is an RMA administration. And then Veteran Farmer Rancher, it's a little bit younger. So BFR, we call it BFR, Beginning Farmer Rancher started. And then shortly after, we saw the need for, veterans that were in service of this country, now wanting to farm and saying, how can we help get those individuals
I
started?
wonder if Dave knew that last year.
I don't think he did, but I think he mentioned something about getting a better rate or maybe something with his APH.
Better trend adjust.
Yeah, or whatever with his agent.
Well, we'll have to make sure he knows. Dave farmed for his first time last year.
Okay.
Bought his first farm, planted his first crop. Didn't get to harvest it because he sold it for silage.
Yeah.
Yeah.
Yeah. And that's the good thing about, a lot of agents will maybe have that idea, but I would say, on behalf of the agent, I would say too that if you are new to farming, make sure you're telling your agent that, especially if they're not a new, maybe you guys are just now working together. Some of them, we're in those small areas where we know everybody knows everybody, right? But that's not always the case. So it's in fairness to your agent, make sure that they understand that, hey, this is my first year. I've been farming 2 years or whatever. Because there's also some other things with the policy that they can take advantage of. For example, new producer and things like that. So
Who determines whether you're a beginning farmer? Is that
So-
FSA?
no, it's actually tracked off of your own individual Social Security number. So if you've ever farmed or if you've been attached to a program at FSA, we're able to tell, okay, they've had row crop before, or they've only had it for 2 years. So it follows your own ID, and that is how it determines how we determine on the crop insurance side.
Sounds like your wife needs to start farming, Corey.
Now there are some rules to that too. So,
I knew they couldn't sneak it by. That's good to know. I mean, we just finished an episode that is focusing on new technology that's available for equipment. Updates, everything's becoming more geared toward the ease of use for farmers and labor because labor is hard to find. Is tech affecting the crop insurance world too?
yeah, absolutely. So precision technology and, again, working for FMH and that is one of our big components. So we consider ourselves the leader in precision technology. So we're taking that precision technology to the growers already using and then leveraging it for crop insurance as well. So what we're trying to do and what we tell our insureds that are either using it or getting into it is the benefits of it and being able to use those exact planted acres. So again, they're using that for all sorts of decisions on the farm, right? You're looking every year at input costs based off my precision tech. We're using it that same way with crop insurance. It also assists us greatly in claims payment. So what's really important to our adjusting team out there is not only first contact, getting out there, getting that face time with the grower, making sure that we're expediting that claim. Precision helps that a lot. So those old, when we say we got to go climb bins and measure bins and things, precision takes that away. So we've seen a huge dividends have been paid off in our ability to quickly pay claims off precision information, precision data that's pulled in, and we have API connections essentially with FieldView, My John Deere, and we can use other farm management softwares to be able to administer that. Another thing is audits. It's that word that nobody really wants to talk about, right? But it can happen at times where you have a large claim or you've got an audit that pops up. Having those records, being able to pull those in and give that definitely helps because that's the actual data we're pulling off the monitor. So.
Yeah, it's hard to hide anything. If you got redundancy, you got your yield monitor, you got scale tickets, you got scale on your cart,
Yep.
and good record keeping. It's like you can audit me. Here you go.
Yep. Well, and for you, it takes it's peace of mind, takes out the headache too. Because if you've ever been part of the audit, it's now I have to go back and find a shoebox full of records, right? I got to go look at those tickets that I've written down and thrown in the glove box of the semi or whatever. Now we're printing tickets out and we're able to look at that and speed that process up.
Yeah.
So
I have enjoyed the this integration of technology. I don't think I've been into an FSA office for 3 years, to certify acres. That used to be a whole day process to go, do that. And now that is so nice. And I pay rent off of what I plant, not what they say the field size is.
Well, and when you first started that, did you have I think sometimes we had that misconception that they had to match, right? That FSA, my FSA acres have to match my crop insurance acres.
Yeah.
Well, that's not the case. So to your point, here's my actual acres. This is what I want to pay premium on. Right. So that's also the differences in the programs, but that's also where we've seen with premium payment, it's instead of paying on the extra 25 acres that are listed, I'm paying on my actual planted acres now. So.
Yeah, and it's hard. Some landlords have been disconnected long enough. They got 110 acres, but you only plant 95. They don't get why they're not getting. Well, it's trees. I'm not logging.
Right.
So why would I pay you money for that?
Yeah, and the old drawn maps that have been there for a long time, and then now everything's changed, right?
Mm-hmm. So as you think about what's coming down the pipe from FMH, what can you share, or what are you most excited about?
Sure. It's a great question. I don't, as far as what I can share, I think for us, from a product standpoint, we're going to remain with the same products we really had. I think the biggest thing for us is, I don't know as far as coming down the pipe in the future, but for us, what we try to focus on every year is knowing the American farmer and knowing some of what they're seeing, right, and understanding what they're dealing with. I think for us, coming down the pipe is we want to continue our service. And I know that's cliche because I'm sitting here from a company standpoint and saying, but we truly look at, if we want to keep people farming and we want to keep the ag industry strong, we have to be able to weather the storm in these years, so to speak. And knowing that we have a great adjusting staff, we've got, I really, truly, we work with great people that are dedicated to ag, dedicated to insurance, and just making sure that every year we're keeping our service, we're keeping our products and things in line to where we can provide that service and provide those products every year.
Just because we know there's probably a lot of people that didn't hear last year's show, we should ask about the big one that everyone was so excited about last year.
Yeah.
So last year we discussed what would we call it? The pasture and rangeland
forage.
Is that still a thing?
That is still a thing. Yeah, and in fact, there's thousands and thousands of acres insured under PRF right now. So across the country through multiple AIPs. What do you want to know about it? Unique product.
Well, I mean, we're not in that realm of the country,
Yeah.
but there's a lot of people that didn't know about it last year. So
Yeah.
just go through it.
As
Sure.
of today, we've missed sales close, correct?
Yep, correct. Be coming up. It's a fall sales closing date. But essentially, what you're doing, so it's not a drought product. Okay, what it is, it's a rainfall index product. It's PRF, pasture rangeland forage. There's also in certain states annual forage, and then also apiculture. It's all under the rainfall index grid. Essentially. So what you're looking at is you're looking at a certain time frame throughout the year, or multiple time frames, to say, in order to get the rainfall I need on that pasture or on that forage product, this is what rainfall is expected. If I buy during that portion of time, I can buy a coverage level. If the rainfall falls below that threshold, that's where we start seeing payments. So you're really truly ensuring that you're going to get the rain you need in those areas. Especially for those large forage growers, those folks that are doing hay every year, selling a lot of that, or just pasture. Right. So we have a lot of acres insured under pasture. We're running cow-calf operations on, whatever that may be. It's a really, really popular product with those groups.
But you said it's not a drought coverage.
It is not. So that's one thing that it shouldn't be sold as drought coverage. It truly, it's not.
But if you have a drought,
if you have a drought, it's on grids too. So it could be that it's a countywide product or county level product, so to speak. But it's on certain mile by mile grids. So it could be you have a farm, 15 miles away is not going to do the same as the one you have right there and may not get paid. It also is paid at intervals throughout the year. So that is one thing that's unique about it, is it's not a once a year payment. If I'm insured in a couple different time frames, like 3-month, 2-month intervals, I can be paid after that interval on that particular ground.
and it really doesn't, I got to think of how to say this. If July is typically a drier month, that just means the indices are probably lower as well.
Right.
You can't take March's rainfall indice and put it in the month of July.
Correct.
Yeah.
Yep. So that's where it becomes careful on looking at it like a drought product, because the way it's rated and the way it looks at things are when do we expect that rainfall. But it's in those March and April time frames where you expect to get more and you don't get that rainfall. So that's what it's trying to protect you for. So. Yeah, I'm glad you asked about it. Apiculture, honeybees. So we got to have rain to have, pollinators and things like that for honeybees. So that's also a popular product in areas where, and we're seeing a lot more honeybees that are, apiculture that is
I
insured.
can confirm that.
Yeah.
From the spray side of
sprayers.
things, from running custom fungicide and not doing all that. You look at the bee map; they are everywhere.
They are everywhere. And do you guys remember the times where we really wouldn't see any beehives anywhere?
Right.
You may not see them. Well, now you get down the road and, specifically where we're at in Iowa, we see a lot of beehives.
And I do love me some honey.
Oh, yeah.
Yep.
Yeah, it's hard
So.
to beat.
Especially when it's in my whiskey.
What? All right.
It's a good honey whiskey. I do think you need to take back to your development team, your developers. I do think there should be riders or discounts, like if somebody spends their time listening to Farm for Profit. It's a more educated producer, or like Corey said, if you've got the more technology in your grain storage.
I think there's something there.
And I would go as far as to say, if you're using precision planting technology and you can tell us how deep your seeds are consistently spaced with it,
I mean, a little bit of that would be reflected in your APH if you're doing a better job there.
fair.
Right?
Yep, that is fair. Yep.
Yeah. But wouldn't that be nice if you wanted to upgrade your planter and you knew that maybe a portion of the funding for that was going to come from a discount on your insurance?
That brought up one thing in my mind. Like, is there still discounts on crop insurance if you're doing cover crops?
Yes. Yep. So, and some of that, the deadlines and things are passed, but yeah, coming up, there's still some products out there, or some rules out there on cover crops, and I believe now, I'd have to look and see as far as what Iowa's planning on doing this year. I haven't looked at that recently.
It's state
In
by
the past, there have been, yeah.
Yep.
Some states offer different things, but in the past, yeah, Iowa has had a $5 discount per acre on the cover crop. So.
A little something to help.
I didn't know about that. I wonder if we were utilizing that.
You're using your cover crops for an actual crop, though.
No, not
So-
all of them.
Not all of them?
No.
Okay. Yeah.
Probably 25% of it gets harvested.
Okay. Yeah. Would be worth something to look into.
Perfect. Did we miss anything? I'm sure we did, but
Oh, I'm sure. Yeah, we could talk about this all day, right? No, I think hopefully
you can talk about it.
Hey, right, that's right. No, I think the biggest thing for for guys that are looking at stuff right now this time of year, best thing I can encourage is talk to your agent. Make sure you understand. I think as we talk about a plan for insurance, again, as you mentioned early on, it's not always the most fun thing to think about as you're looking at, especially looking at the pricing we have right now. But I think it's important to have that conversation with your agent to understand what is your cost per acre. What's your input cost? What's your cost of production? So we can build that insurance package. In years prior, we might be able to say that we could insure above that cost. Right now, with prices being squeezed and inputs not really changing, that's where it becomes more and more important to have these conversations and say how can we close that gap, and how can we start to ensure that we can even possibly get to that break-even point, or ensure that we're protecting ourselves that way. So that's what I encourage listeners that are listening to just have those conversations and see what is your best risk protection package to be able to maximize that potential.
I like it.
Perfect.
You good?
I'm good.
All right. Well, we appreciate you stepping in here, giving our listeners a little bit of an update, and for helping our young listeners, maybe get some clarity on what all the acronyms mean.
Yeah.
It's been beneficial to me, and hopefully it's been beneficial to them. So thank you.
We got to have this done. Let's see. It's probably different for north-south, but for Corn Belt here, when do we need to be signed up?
By March 15th. So it actually falls on a weekend this year, so there's a little bit of lenience in there into the 17th. But essentially, a lot of agents are going to say, let's get in here before March 15th
Friday.
and let's
Yep.
get this done.
Yep.
So March 15th is really the bogey here.
So get on it.
That's right. Listeners, you heard it here. So until next time, have a good one.